topic of discussion, discussing tax amendments for the financial year 2022-2023. This particular half of the discussion, we shall as well look at tax mobilization and how URA is fostering this one, and then also looking at the other side of the coin in regards to the performance of the previous financial year. But now, summing up our discussions to do with the tax amendments, I would ask my guest to at least give us more from the tax amendments that were made for this financial year.
Yes, there have been changes, especially in terms of fostering local production and export promotion.
Okay.
Largely, when you look at the implementation of the East African, the ESC, Common External Tariff, where we've harmonized and pushed most of the items to 35%, if they are going to be imported into the country, broadly to encourage local production. You look at items like the PVC trunks, you look at items like cereals being imported into East Africa, certain sugars, biscuits, cakes, all those items. You look at items like gloves, that we, before COVID, used to import at 0 rate, and now they have been instituted at 10% because we have shown capacity to produce these locally here. So broadly, the enhancements that you see in the changes in especially the importation laws, import and customs, are broadly to enhance local production, going by the Bubu mantra that the country is actually trying to tow. When you look into, for example, the hot issue on textiles, there are those items that had been gazetted, and with the knowledge that there is local capacity to produce them, you see those were put at a slightly higher, the kilo discussion that has been trending at 3.5 if you're importing, or 35%, whichever is higher. And when we get to the garments, the other items at $3 or 35%, whichever is higher. There is a discussion, and that has happened at ministerial and the Ministry of Trade level. We are hoping for guidance that will come through on those. But largely, all of these and the discussions that are going on is to show that there is local capacity to produce these. The other that I would talk about is in terms of value-added tax on educational materials. Now, I need to talk about this because it's going to increase competition in the market, especially for locally produced educational materials that have been benefiting from a 0 rate of value-added tax. Those that are made in Uganda have been benefiting from a 0 rate on value-added tax, making them cheaper compared to imports.
All right.
But now, given that we are in the ESC, there has been an extension of the 0 rating of such items to even include items from outside Uganda.
So do we expect other items that have been 0 without paying taxes to at least also get into that tax payment field now?
Let's look at a geometry set that is made in Uganda.
It wasn't being taxed?
It is 0 rate VAT, value-added tax.
Previously?
In Uganda, yes. It still remains at 0 rate. But what we are saying is, even the geometry set manufactured in Kenya is going to enter into Uganda at value-added tax rate 0.
All right. So you're making it even easier.
Yes.
But is the case with the people in Kenya? Because I can at least see Uganda Revenue Authority making it easier. But as the Kenyan Revenue Authority or the people in Tanzania also...
It's harmonized across. And it's towards that single market build that the partner states are trying to forge. And we hope we will see better quality educational items, not a geometry set or a protractor that you shake twice and it breaks into 2
So that also applies to books, pens, and...
gazetted education items, atlases, textbooks, certain laboratory equipment that are used in labs, and so on and so forth, as long as it's gazetted as an educational item.
But I think a pen is not gazetted as an education, because I believe it cuts across.
As long as they are, it is specific to education. These have been defined very well in the Flores Agreement.
I think. Textbooks.
If you look at the Florence Agreement that was signed in, I think, 1970s and 60s, and later it was revised in Nairobi in the later years. It has listed properly, and any proprietor within this sector should acclimatize themselves with the innings, with the detail of that Florence Agreement on what is gazetted as educational items and what is not. It really details out all these and the benefits. One should focus on them to understand them.
All right. Now, into the next financial year already, but I would want us to at least have a review of the previous performance from the Uganda Revenue Authority. Did the Uganda Revenue Authority hit the targets? And if we did not hit the target, where do you believe was the challenge for this particular one?
Thank you very much. Last year we performed at 21.6 against the 22.4 trillion that was expected to be collected. So we're short by 700 billion as Ugandans, but we need to applaud ourselves as Ugandans because of doing that.
Because of the times that we've actually...
With all this economic turbulence that we are having. You see the prices where they are. And for Ugandans to have even mastered the courage and shown the tenacity to mobilize that is commendable in itself. So yes, we were below target, but we saw over 12% in revenue growth. I mean, the growth in revenue that is unprecedented is something to take home. Okay, so, and I'm looking at this, and if you look, for example, into what we performed like as Ugandans last year, and the targets over 25 trillion being set for Ugandans to mobilize among themselves through URA this new financial year. I'm looking at a target of 16 trillion in domestic taxes. Now it means we are showing a growth in mobilizing domestic revenue that even where we are unable to rely on the international external taxes, as a country looking inward, we are able to sustain. If you are keen, the target that we are collecting as one department, as Ugandans in domestic taxes alone, was the target for the entire Uganda in, I think, 2015.
This particular one that was collected?
For one department in Uganda Revenue Authority. If you look at what domestic taxes has been asked to collect this year to mobilize Ugandans to do, it was a target like 6 years ago for the entire country. So I think there are signs of growth. The over 25 trillion that we've been asked to collect, I think is challenging, but if things stabilize, I think we will be able to mobilize this and see our efforts towards reducing the debt burden on this country get stronger.
All right, and also there was a report that was revealed that from the customs side, the target was hit. How true is that?
Yes, yes. On the customs side, we saw performance over 100% in what was expected, and I think that goes to speaks to the enhancements and the technological advancements that have been made on that front. The one-stop border posts, the faster clearance timelines, the customs help tool that has been put in place to expedite. You look at the document processing center that has standardized evaluation across, the non-intrusive inspection that is helping people to run through this verification process as fast as possible, the regional electronic cargo tracking system that sees that cargo gets where it's supposed to go. Okay, these are all the enhanced enforcement, to make sure that all revenues are declared through the system. All this, I think, has enabled the customs team to mobilize the Ugandans, to declare the revenue as it's supposed to be. And we believe with that effort, customs is now leaning more into its trade facilitation angle or an arm of business that it is supposed to be seen forefronting in the years to come.
Okay, there is something also that we didn't mention about the penalties in
Yes.
the tax amendments.
Yes.
If at all you can as well hint on that, I would want to know which penalties have been laid on board for people who evade these taxes.
Okay, yeah, thank you. We talked about the enhanced regime. Like we said, no new taxes, but there has been enhancement. And when you look at the penalty regime that has been developed, it is more punitive to discourage non-compliance.
Okay.
Because your colleagues are complying, you are not complying. And that kicks them or disadvantages them in the business field. And so what we are trying what we are seeing within the proposals and now the new laws, look at areas like under declaration or misinformation to the taxman. Where we've had a penalty of around 4 million, 5 million, it has been raised to 110 million.
Okay.
So that is how punitive the regime is getting, especially to discourage any misdeclaration, because that's where we've seen tax losses happening. We have scenarios, especially towards the adoption of the electronic fiscal receipting and invoicing solution and the digital tracking solution. Now, we've had persons and business operators adopting these platforms, but actually in a sort of a gimmick to show as though they are, but when actually they are not fully adopting these initiatives. You find someone actually putting a tax stamp on their water, but when the stamp is not activated, meaning even if you scan it, it will not give you the details, or it will not give the reporting and correspondence on the URS side as it's supposed to be doing. Now, you realize that there have been penalties of over 1,500 currency points that have been instituted, defacing, tampering with electronic fiscal devices, forging, printing over, not activating these tax stamps, not issuing the tax stamps. All that attracts over close to 7 million Ugandan shillings in penalties. And scenarios where we have your entity or your shop or your business not issuing these stamps, a penalty or one of the areas where that administrative letter has been introduced is for us to ask you to agree with you that we close the shop until you're able to start issuing these stamps or to sell these items with issuing the electronic fiscal, the e-freeze invoices, e-receipts and e-invoices, or to sell items that have been stamped. And at that point we can say, okay, you can open shop again. And for forms of misdeclaration or failure to issue information that may be needed for automatic exchange of information, penalties have been extended to over 9 million. That is 2,500 currency points. Taking note that a currency point means 20,000 Ugandan shillings. So the penalty regime has been enhanced to discourage any non-compliance, because the scenarios that the scenario that we've had has been where a penalty has been light. Someone could plan to deliberately misdeclare, underdeclare, or misinform the tax authority, and will be ready to pay that particular penalty because it is not punitive. So a punitive penalty is put in place to completely discourage, such that nobody would like to face the consequences of such a penalty.
All right, Mr. Michael Masembe, let's also now look at tax mobilization as Uganda Revenue Authority. I think this should be a very huge concern to every Ugandan out there and every liable taxpayer in the country. So from the perspective of taxes and payment of these, I would want to know how is you are immobilizing for the taxes, because now we wish to hit the target by the end of this financial year. But how can we do that as the taxpayers?
Yeah, so we started last financial year around 1.67 million Ugandans on the tax register.
Okay.
And by the end of right now when we're talking, we are close around 2.5 million Ugandans on the tax register. I think the addition on the tax register was a big boost, seeing the contribution that was made. That is one. So efforts in expanding the tax register are very key. That every deserving Ugandan to be on the tax register is on the tax register. We have 45 plus million Ugandans, but at least we know over 7 million Ugandans are in productive and income generating activity, and so we would expect that they are part of the tax register that guides us on who should pay tax and who may be exempted.
Okay.
So expanding that tax register from the 2.5 million to the 7 million that are supposed to actually be on the register is very, very key. That is one. Two, building efficiencies. URA itself looking into itself, reflecting and working on its processes to make them better, to make things easier for the taxpayer to pay. Because we know, we appreciate paying taxes is not an easy process, okay? And so the decision inside one to pick part of their profit and pay tax is not an easy decision. So when one chooses to make that decision, we want to make it easy for them. And beyond that, that they do not pay anything above. So fair taxation is central. And that's why there are structural and staff changes that are happening inside the institution to see that we are driving towards that similar direction. That is one. Two, through service enhancements, we are extending our service platforms. You look at the contact center that we've set up to give this support.
Okay.
Look at the initiatives like the DTS, the digital tracking solution, helping us to declare what is manufactured. And we are adding more and more products onto the line. Every period we are going to be extending into more and more lines. The e-freeze solution, coming into and coming deeply into the real estate sector to see that property owners who are actually earning from these properties actually pay their due taxes. And then the other that we need to really look at is that taxpayers get to know that where things have not been going well, there is a window to come clean. You see, there are many taxpayers who would like to do good, but they have made certain mistakes in the past that they actually fear to declare to URA, knowing when I report this to URA, the penalties that are going to be meted out to me will just raise me out of business. We are saying there is a voluntary disclosure window where you can come clean. We look at what has gone wrong before. We say no penalties, no interest. Let's look at only what has to be paid as principal, and we start a new slate, a new chapter. And also the alternative dispute resolution mechanism that is available, where we have to take the deliberate effort to take issues out of court. Because you see, URA and the taxpayer, the relationship is not a one-off. No one creates or sets up a business and they want to live for just 1 year and get out of business. They want to exist. And the same applies for URA. We want to have a business that is here today, here tomorrow, and for the next generation.
Okay.
And so we want a relationship of partners where there are issues that instead of going to court, we can get out of court and discuss maybe on a payment plan or agree on a position amicably.
But you see, some businesses are actually complaining that they are overpaying a lot of taxes than than the money they actually make in terms of sales turnover, and it becomes very difficult for them to remain in that business.
But how does that happen? Because you declare to Uganda Revenue Authority what you make as sales, and where there are losses, that loss will be carried forward to the next period.
Okay.
And where there are profits, the profits will be taxed as per the rates that we discussed. 30% for a corporate entity, 10, 20, 30% if you're an individual in business. And we have presumptive rates for small businesses whose turnover starts at 10 million going up, and 10 million below, there is no tax. So what I would encourage businesses to do, especially in hard times like this, take note of everything.
You know, some of them also complain that sometimes URA claims that people don't give the rightful records of what they have.
Yes.
And I think that is the reason as why the digital tracking system came in.
Yes.
Because most of them say URA claims that people don't give the rightful records, or they hide some stock off the shelves and all those things.
Yes.
And that is the reason as to why maybe it is difficult for them to remain in business.
The scenario is this. Where you are making a declaration to Uganda Revenue Authority, that is your right in the first place.
Okay.
You make the declaration to Uganda Revenue Authority, and we only generate an assessment to you if you have not made that declaration. Or we only generate an assessment to you if what you've declared is seen not to be right. So URA does not get out of wherever it is and it sends an assessment to a taxpayer. No, it is after those scenarios of you making your declaration to URA, and if you do not make the declaration, URA will send an assessment. But still, when URA sends you an assessment, you have the right to object to this assessment. An assessment that has been sent to you by URA, where the amount being taxed is not declared, where the reason for that assessment is not declared, where the tax actually and the penalties, the background, everything, the date of payment, it's all not declared inside that assessment. And that assessment does not even tell you how to appeal to that particular assessment.
Okay.
It is an incomplete assessment. It does not hold.
All right.
Yes.
You mentioned about the digital tracking solution.
Yes.
The IFRIS. How was the implementation so far for the past 2 years after it was launched in the country?
I'll talk about the digital tracking solution. Now, when you look at our implementation of that solution, in the first year, we saw growth in production output. Where you had this particular amount of items, for example, metric tons of sugar produced, or items that have been produced, maybe drinks, because we started out in the soft drinks, we saw an upshoot in the volumes of items that have been declared, and that has somehow created some stability and efficiencies in the value-added tax. But going to revenue, at the implementation of the digital tracking solution, we saw growth in revenue by over 10%. Okay? And we have with the digital tracking solution, we've onboarded over 518 importers and manufacturers onto the system. This is way above the less than 300 that we had before registered for these taxes, like excise duty. So I think the solution is very, very much helping in seeing and bringing onto the tax radar all those operators who are not in the system. Now, in terms of mainstreaming the business, it is especially in these particular sectors where we saw a lot of counterfeiting. And the digital tracking solution, whereas it is a revenue mobilization initiative, it is also a trade facilitation. It's a business facilitation tool. It's kicking out all the counterfeiters from the business, and it is giving life and a chance to the markets, to the genuine manufacturers of these items, to benefit from the markets for which they produce, for which they have taken effort to create standards, to create brand names, and benefit from that kind of investment from the enterprises. So we think both revenue-wise in collecting taxes and business-wise in giving the benefit to those investors in those particular sectors to benefit from their investment. I think the tool has been very, very, very instrumental. But nonetheless, there are challenges. I will tell you that. For any implementation, there are challenges. The uptake, the knowledge, the technology itself, it is a process.
And some business people say now things are even more expensive with payment of the DTS.
Things are more expensive. For example, in taxes like value-added tax, local excise duty, because the taxes for which these items or these initiatives have been implemented are consumption taxes broadly. Okay, at the end we would see the profit tax on income at the end of the year, but they are largely on consumption. And the intention of these initiatives is to streamline and create transparency in the declaration. Where there are changes, maybe there are certain taxes that were not being paid for these particular items.
All
and
right.
right now, it becomes inescapable for one not to pay those taxes.
All right. Michael, in a minute, your parting remarks as we are winding up with our discussion this morning.
Thank you, sir. The parting remarks are, we closed the financial year 2021-2022, 30th June this year. And we are closing the first month of the new financial year. So it is practically 5 months to the end of these 6 months in which all business operators are expected to make their declarations for the year that we closed.
Okay.
So I encourage all business operators to start filing their financial year returns for the previous financial year and to put in their provisional returns. If you want tax clearance certificates, go to the URA website and apply for this tax clearance certificate, get business, and where you're not supported in time, call 0800 11 7000. Our teams are there, 0800 21 7000. Our teams are there to support and assist you in any URA process. I thank you.
All right. That is Michael Masembe, Manager, Tax Education at the Uganda Revenue Authority. It is the last week of the month, and you should as well start declaring as well. And it's high time businesses started doing their auditing as well. And the week is starting on a high note with tax awareness, I should say. This is Smart Means Business. Thank you very much for being part of us from 7 a.m. till this particular time of 4 minutes to 10 o'clock. Coming up after the break is Financial Markets with Anthony Subuga. Later on will be Yugi Tukole with Fred Makuya. Skill Up Naomi Mutumba, then Jen Kolira with Hassan Duga. We shall be having The Point with Dr. Joseph Tindiewa later on in the day, and I'll return in the night with Business Today to give you more of the news updates from the world of business. We are entirely business. It's Go TV, channel 394. Thank you very much for being part of us. I'm Jordan Paul Sonko. Have a blessed day. Till tomorrow. Goodbye.